Welcome back. Here we are. It's December 10th. The government has told us what they're going to do with the interest rate. Josh is joining us from Mortgages for Less. Josh, thanks for joining us. Tell us what happened today.
So no change happened. 6 weeks ago, the Bank of Canada lowered its rate, and there was some expectation that it would lower again today, with a much bigger expectation that we would see that rate lower sometime in January or maybe February, early in 2026, another 0.25% interest rate cut before maybe eventually rates start to go up in the future. But unfortunately, in the last little while, some new data has come out and become available. The market is no longer expecting any interest rate drops. And there's actually some forecasts that we're going to see interest rate increases starting in mid-2026. I don't love to hear that. It's not great, but today with no change, widely expected, although it's likely here that we're going to actually, right around the time we're recording this, hear that the United States Fed has finally dropped its rate 0.25%, but they're quite a bit further behind than we are in Canada. The Bank of Canada specifically said the governing council sees that the current policy rate is at about the right level to keep inflation close to 2%. And you know what? The Bank of Canada has one goal, one mandate, and that's to keep inflation as close to 2% as possible. So if things cooperate, the interest rate will stay more or less where it is. That's the Bank of Canada's direct statement. Now, why have things changed in the last little bit, Jay? You know, we've seen the job report, the employment numbers. Over the last 3 months, Canada has added, the headline number says, 180,000 jobs, which sounds great, but it's not actually really that great. See, what happens is 93% of those are part-time jobs for 15 to 24-year-olds. Those aren't the people like those watching this video who want to own homes or who are buying homes. Those are people still in school or barely getting started in their jobs. Heck, it even includes some high school students. And when we're talking about the full-time jobs, the ones that actually pay mortgages and pay real bills and housing, we've lost 18,000 of those. So the headline number of a whole bunch of new jobs actually isn't great. And it could actually very well be a lot of part-time jobs in retail, in Amazon distribution, in delivery, because it's Christmas time. And so we might find that in the new year, a lot of those part-time jobs go away. We may see a reversal of this, which would cause the markets to change their expectations. Now, what we see is good news is bad news, and bad news is good news when it comes to interest rates, right? This so-called good news for lots of jobs means less likelihood of interest rate cuts. We all want interest rate cuts. In order for there to be interest rate cuts, we need bad news economically. But we don't necessarily want bad news economically. So it's a bit of a tough conundrum. But with part-time growth, that may turn into prove that it was actually not as good a news, which is where it leaves us with more opportunity for some rate cuts here early in 2026. And that's actually what I think is going to happen. The Bank of Canada is seeing that this good news isn't maybe quite as good. So they've definitely left room to, if nothing else, keep rates the same and not start increasing.
Yeah. But, you know, it's super interesting, isn't it? Like, depending on where you are in your either home buying journey or homeowner journey, whether it's good or bad news, you know, as these rates drop, it's great for a renewal. It's great if you have a job and you can qualify, but if you're job hunting, it's a different story. So I guess all we can really do is keep our thumb on the pulse of the market, what's going on. We'll keep our eyes on the data. I love the fact that, you know, we're able to dive a little deeper into not just believe all the press releases and really look into what's going on. So that's very helpful to know. So for now, though, nothing's really changed. I guess we'll be careful of the hype. Make sure we don't get sucked into doing something that we shouldn't. So thanks for that, Josh.
Exactly. So yeah, no change there. We have seen a little bit of upward movement on the fixed rate side, but I think that's likely also going to be short-lived here. Let's get through the holiday or Christmas season here into the new year. And I think 6 weeks from now or 8 weeks from now, we'll have a bit better idea of what to expect as 2026 gets started.
Beautiful. Thanks for that update, Josh. We'll talk to you all again real soon. Thanks for joining us. As always, we love comments. We reply to them all. Please like, please subscribe, and you know what? Share our link to your friends and family. We'd love to help them too. But for now, thank you. We'll see you next time.